Our weekly market update this week is with RP Data Senior Research Analyst, Cameron Cusher. Welcome, Cameron.
G'day, Anthony. How are you?
Good. So your March report has just been released. Talk to me about it.
Well, I think the first thing to highlight is that we actually changed our methodology and greatly improved it, and we now have a daily index. So instead of reporting data with a big time lag, we were able to report data to the end of February. And if we have a look at the results for February, it was actually a little bit more positive than probably most people expected. Property values across the combined capital cities increased by 0.8% over the month, but they were down 0.2% in the quarter, and they were 4.4% lower over the year. So whilst there was an improvement in February, it was offset, I guess, by the weaker months of December and January. But it'd be interesting to see if those trends continue over the coming months.
So Cameron, when we're trying to compare the market with previous results, if we just take the big picture first, and let's just drill down. So if we look at globally, is there anything happening? And then maybe just a quick snapshot on how you see national, and let's get stuck into South Australia as the third stop.
Yeah, sure. So globally, I guess we're still being, things are still being influenced quite heavily by what's going on in Europe and the US. Data coming out of the US has been a little bit more positive over the last couple of months. Europe is still a bit of a basket case and is probably weighing quite heavily on people's sentiment. Across the country, obviously, we had the Reserve Bank's decision earlier this week not to move interest rates. They're sitting at around average levels, but we did get GDP data on Wednesday, which showed that the actual rate of economic growth is quite slow, up just 0.4% over the quarter and 2.3% over the year. And that may entice the Reserve Bank to cut interest rates in the next couple of months because the economy certainly is growing at a rate below trend. If we drill down into Adelaide and what's happened with the housing market there. So over the month of February, property values in Adelaide increased by 1%, but over the quarter they were actually down by 2.7%. So much like what we saw across the combined capital cities, a pretty good month in February, but offset by weaker months in December and January. So it'll be again, we must probably keep an eye on what's happening there and see if the improvement in the market continues. Over the year, though, values in Adelaide were down by 3.7%, which was slightly better than the 4.4% fall we saw across the combined capital cities. And keeping in mind that Adelaide still is the most affordable in terms of median price to buy a house or a unit on mainland Australia. So it'll be very interesting over the next couple of months to see what happens with that.
Okay, so you still see South Australia as the most affordable mainland state. I thought we'd lost that crown.
Well, I'm just looking at median prices. Obviously, there's other factors at play that impact on affordability, such as wages and that, and that may not make Adelaide and South Australia the most affordable state. And certainly, an area like Brisbane, for example, is with its value falls it's been experiencing, has certainly closed the gap in terms of cost of housing to Adelaide. But one of the other points to point out is that over the month of December, sales volumes in Adelaide were 14% below the 5-year average. So still not a real improvement in sales activity in Adelaide as yet. Even given we saw 2 interest rate cuts at the end of 2011. And the trend has certainly been towards lower volumes of sales really since late 2009, once the Reserve Bank started lifting interest rates coming out of the global financial crisis. I guess for real estate agents, that's the difficult part, that there's fewer sales occurring, there's less commission out there for them.
Exactly right.
And obviously for governments, there's lower levels of stamp duty to be collected off those transactions if there's fewer happening.
We've certainly been getting some heavy stats on the political scene with Isabel Redmond giving us a whole lot of details, and some more, I think, shortly on the stamp duty impact on the government coffers. So those volumes of transactions would be running right through retail, I imagine, right through refrigeration sales, TV sales, pretty much everything.
Exactly. exactly. It has a big multiplier effect. When people move house, they buy new white goods, furnishings for the house. So it really does have a big impact right throughout the economy, and really does hurt retail in a number of other areas as well. People even say quite a lot of people, when they buy a new house, will go and buy a new car as well. So probably hurting car sales as well.
Now, what about the rental market, Cameron?
The rental market in Adelaide hasn't seen a lot of growth over the last year. In fact, the houses have outperformed units, but they've only grown by about 3.5% over the year, and units have actually recorded a slight fall in rental rates. So the rental pressures aren't as strong in Adelaide as they are, I guess, in markets like Sydney and Perth, where we've seen some really strong growth in rents. And that comes back to the fact that supply, there's not the undersupply of housing in Adelaide and across South Australia as significant as you'd see in markets like Brisbane, Perth and Sydney. But so there's not a lot of rental pressure there, and we haven't seen a great deal of improvement in rental yields over the last 12 months either.
Now, the first home buyers are moving back into property, so are they vacating the rental market, or are they coming from mums and dads, and so on?
It's really hard to determine, but given that we're not seeing a lot of pressure on rental rates, you'd have to suggest that some of them are coming out of the rental market. Obviously, some of them are probably coming out of mum and dad's house as well. We did see the latest data we've got on first home buyers is up to December, and we saw that there was a bit of an increase over November and December in first home buyer volumes, but a lot of that was being driven by Queensland and New South Wales. In Adelaide, first home buyers are still accounting for less than 15% of all owner-occupier purchases. So there was a slight improvement when you compare December 2010 to December 2011, but you're still looking at less than 15% of the market being first home buyers at the moment. So clearly the lower interest rates and the value falls we've seen over the last 12 months still haven't really been enough to lure a lot of those first-time buyers back into the market.
Okay, and how are you finding stock levels? The last report I saw had the new stock coming on the market that had dropped significantly, the stock on market for some time increasing. Any sort of comment on that?
Well, pretty similar conditions. The number of properties advertised for sale, properties advertised for sale across South Australia is 11% below where it was at the same time last year and 18% lower in Adelaide. But the issue is the amount of stock that's still sitting on the market and hasn't moved. We have a look at across South Australia. The total number of stock available was about 30% higher than at the same time last year, and about 20% higher in South Australia. So there's still a lot of stock that's been sitting on the market for quite some time and is just not moving. So either people don't really need to sell and are quite happy to let it sit there and see if they get an offer, and they'll take it if it's at the right price, or if they really want it to sell, they probably need to get a little bit more realistic about their price and set it appropriate for the current marketplace.
And the discounts, have they increased on people that are selling? The bigger discounts, are you noticing any movement there?
With regards to the discounts, we tend to see a little bit of an increase in December and January, and we've seen that again this year. But if we have a look at the discount levels in January, they were sitting at 7.3% for houses, 7.2% for units. That's slightly below their peaks, recorded at 7.6% back in September of this year. Time on market, though, does seem to be easing somewhat. So houses were taking 70 days to sell in January, and units 74 days. And that's obviously below their peak, which was recorded at 81 days back in September. So a bit of an improvement in time on market and vendor discounting, but obviously with so much stock still on the market, if you really want to get it sold, you need to be realistic about your price and be willing to negotiate on that price.
Now, Cameron, just to clarify the time on market, is RP Data still reporting on the actual selling agent's time on market, as opposed to if they were on the market with other agents and then changed and then sold? Or
it's simply when the time is first advertised till the date at which it ultimately sells. So it doesn't matter if it's changing agents or whatever. It's a complete measure of how long that property actually takes to sell. But we only can measure this across properties that are actually transacting. So obviously a lot of the stock that's not moving has been on the market for a lot longer than the 70 or 74 days as we stated.
Okay, then that's the difference because we're getting conflicting numbers, that's all.
Okay,
Yep.
that probably makes sense.
Right, okay. Now, Cameron, just to wrap up for us, bear in mind we're a property audience and we don't mind hearing the good news and the bad news, but give us 3 fabulous points that we can leave the weekly report on.
Well, I guess the encouraging thing for the market is that 1% increase we saw in February in values across Adelaide. So that's point one. Point two, though, is that the amount of stock on the market is still at really elevated levels. It's just 4.5% lower than it was at its peak back in November last year. So that's a cause for concern. But then the third point would be that we are seeing a decline in the time it takes to sell and the level of vendor discounting, which means that maybe conditions are starting to improve, but we'd obviously like to see a bit longer trend than we've seen to date. So on balance, things are probably likely to get a little bit better in 2012. But as far as any significant growth in property values, I still don't see that happening over the year.
Cameron, just a bit of feedback direct from the market at the moment because you get some sort of a delay there, even though it's much more current than it was. We're finding that January, February were pretty active, pretty lively. It just seems to have got a bit of a smell about it just in the last week or so. But I don't know whether that's just because Adelaide's had Mad March where there's so many distractions. So we're just waiting to see. Anything at all you've picked up from speaking to people out there in the rest of Australia?
A lot of the people have been saying that if a property is priced well, it's moving and it's not taking very long to move.
Definitely.
There's plenty of inquiry at open homes, and we're hearing this right across the country. But if a property isn't priced right, it's getting very little interest and no offers. So I guess that probably sits fairly closely with what you're saying.
Absolutely, unbelievably spot on. And what we're finding, if the pricing's right, there's tons of buyers, and if it's wrong, there is just nothing happening. So that's confirmed. This is the same here in South Australia.
That's good to know. It's good to see we're getting some good information.
Yeah, well, Cameron, that's been absolutely sensational. As always, thank you so much for your time, and we'll catch up with you. And that wraps up our week, this week's Market Report.
Thanks, Anthony.